Friends, welcome. We are planning to discuss one valuation model. Previous class, I had given you some brief introduction about three kinds of valuation model. Okay, hope we have remembered that thing. But before that, we had also discussed some basic things like valuation approaches. That is important. Of course, few more things are also important, which you have not yet learned. We'll be learning gradually. What are those things? First of all, we need to decide what should be the valuation base. That is one important thing. Okay, we'll be learning that. We also need to know what are the premises of valuation. That is again one more thing we'll be learning. Okay, valuation base, valuation premises, valuation approaches, that valuation methods, all these things are important for us. Right. And if you remember in one of our earlier classes, we have discussed that there are three approaches of valuation. Okay, hope some of you will be able to recall that. Okay, of which most important approach is the income approach, where we compute the intrinsic value of a business. Okay, we consider the future incomes and many other fundamentals of the company we consider. On that basis, we arrive at a value. Okay. That is one approach, income approach. Cost approach, again, a method where we see the historical cost. On that basis, we compute the value. We'll be learning that thing also. In previous class, we have seen one particular model where we try to value a company by following a market approach. When I say market approach, we need some market data, is it not? So first, we have to decide that how to collect market data, or what are the data which are relevant for me to arrive at the value of a business by using market data. Okay, all these things I need to decide. For that thing, I had shown you one model in the previous class. Let me share the screen with you right now. Okay, we'll be discussing that market approach and relative valuation models that I had told you briefly about that in the previous class. So if you have a look at these approaches, you can see how many types of approaches are there. Valuation approach, three approaches you can see: market approach, income approach, cost approach. Under these various methods are there. These methods will be learning one by one. And in your previous class, we had discussed about some valuation models. And for our convenience, we had classified this model into three categories. One kind of model will give you something called the relative valuation. Okay, how it can give you relative valuation? By comparing a business to other businesses based on certain metrics. Okay, we have to develop a matrix. That is what we are going to learn. Okay, on that basis, we can find out some ratio like enterprise value to revenue ratio, enterprise value to earning before interest, taxes, depreciation, and amortization ratio. Okay, that is EV by EBITDA ratio or price earning ratio. So if you see, on the basis of these ratios, we'll be developing a matrix. And with the help of that matrix, we'll be able to arrive at the relative valuation. Okay, what exactly we are doing here? We are comparing it with the market. We are comparing the business which we are going to value with the market. So many times we do valuation, relative valuation, practically also. Practically, if you see, so when you are buying an apartment, you compare that what is the price at which your neighboring apartment is sold. So that gives you an idea. Okay, that means value per square feet will be this. Is it not? So if you want to buy a second-hand vehicle, that also we compare. Or this model vehicle is sold in the market at this price. So this vehicle should give you this much of value. Is it not? We compare this. And for that thing, we need some market. Okay. And of course, there is one more type of valuation is there, which is called as contingent valuation. This value is subject to some contingencies. That means we value a business or value a company on some basis. Basis means we assume that if this thing happens, what will be the value? Or if this thing doesn't happen, what will be the value? Okay, if company gets merged with some other company, what will be the value? Like this. So that is called the contingency valuation. Some option price models are used to do that valuation. That's different. Intrinsic valuation, those models will be learning subsequently. Here, valuation is done on the basis of fundamentals of the company. Here, cash flow, growth, risk, all these are the important factors. On the basis of these parameters, valuation is done. Okay, here most of the data is collected on intrinsic valuation from the company itself. Whereas on relative valuation, we collect data from the market. Okay, as you see, we need revenue, EBITDA, price earning ratio, all this data are required. And again, under relative valuation, you can have, you can say, two types of models. Okay, two types of models means I had shown you some example how to compute it in a previous session, but this section practically will be doing it. Okay, two types of relative valuation model. First one, if you read, can you read it? What is the first one?
Comparable company analysis.
Comparable company analysis. Here, what we are going to do, we are analyzing the data of some comparable companies. So first of all, we need to have some data of comparable companies. This method is also referred to as COMPS. Where from we can get data? We can refer to the data which is publicly available. So normally we refer to the publicly traded companies data. Okay. With the similar business of this, suppose a company you are going to value is in pharma sector, you need data for pharma sector. Okay, if you are going to value a banking company, you need the data for banking industry. After that, we'll compare the current share price, okay, to some matrices. Some matrices, it may be P ratio, it may be some other ratios. We'll be comparing that. On that basis, we'll be finding out what is the value of the company. For example, if for this P ratio, a listed company's value is this much, my company's P ratio is this much, what should be its value? Like that will be computed. This is called as comparable company analysis. Right? Here comparison is made with publicly traded companies. Or we can do one more thing, one more analysis we can do, precedent transaction analysis. This model also we can follow provided there is some historical transaction. Let us say some historical transaction. Let us say I am evaluating company A. I'm going to value company A. But the same E company has already issued some equity or had diluted promoters' equity, maybe after 5 years at a certain value. So that gives me a reference. Okay, so we can see, we can compare something like this. Let us say at that point of time, let us say 5 years back, my turnover is this much, but the investor has valued my company at 5 lakh. Okay, today my turnover has doubled. So my value should be double. Okay, so that is how valuation can be done. Okay, but for that thing, some historical data needs to be available. Got it up to this? So two methods I told you, rather two sub methods you can say. One is precedent transaction analysis. Second is comparable company analysis. Okay, is it clear up to this?
Yes, sir.
Okay, now we'll try to value a company or value a business by using that, comparing it with some comparable companies first. Okay, I'm showing you for example. You please, all of you, please decide a sector where you want to, where you would like to do valuation. Let me select, for the sake of convenience, I'm selecting a real estate sector or realty sector. Okay, for that thing, what I need to know? First of all, if I want to select a realty sector, I need to decide what are the companies I will be taking for comparison purpose. You have to find out some companies, maybe 5, 6, 10, 20, more is better. I need data for this company. Then only I can do that. Right, friends? So for your convenience, I have already identified some companies, but you can also find out. Let us say you are selecting pharmaceutical companies. So first, you mean using search engine, you need to find out what are the pharmaceutical companies who are actively, let us say, involved in the market, actively engaged in the market, so that it will be easier for you to collect that. Will you be able to do it? I think you have selected some industries, fair valuation you would like to do. Can you give me the name of some industry that you have already selected?
I've selected banking industry.
Banking, okay. You can find out 5 or 10 banks which are equities are publicly traded, so that easily you can be able to get market data. Some other example.
Steel industry.
Steel industry. You can also get several public companies which equities are traded, so you'll be able to get market data. And you can get their annual report, financial statement by going to those companies' websites also. Then what else?
Retail, sir, retail industry.
Retail industry. Okay. There also you can find out some company. I think finding out the company is not a very difficult thing. You will be able to do it. Yes or no? Can you find it out? At least 5 companies or at least 6, 7 companies you find out name of the companies that you believe or you have to justify that these are the companies who are doing business in the similar sector.
Yes, sir. We have already updated the names of the 5 companies everybody has selected on the same Google sheet been sent to you.
Very good, very good, very good. Okay, so that data is available. Now let us see how to collect data from the market and use it for our valuation purpose. For example, I am showing you some example. Let me share the screen with you right now. Are you able to see the screen?
Yes, sir.
Excel file. Okay. Let us say I have selected this 9 companies. And this is in reality sector. Let us say, let me little increase. Are you able to see it clearly? Let us say they are in reality sector. All of them are reality sector. Okay, so I need this data first. So let us say I have selected the company. You just see DLF. I'm also noting down DLF. Then Godrej. Then can you tell me?
Oberoi.
Oberoi Realty, Godrej Properties. Okay, then Phoenix.
Then Prestige Real Estate Projects.
Phoenix, then Prestige.
Then Nesco.
Nesco.
Brigade Enterprises.
Brigade.
India Bulls Real Estate Limited. And
India
Shobha.
Bulls.
Shobha.
And Shobha Limited. Yeah, so these are the companies. This is 8 companies. I think I've selected 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 companies will be collecting data. Okay, now how to collect data? Let me take you to any stock exchange website. I'm going to BSE site right now. Just give me a second. Are you able to see Chrome browser?
Yes, sir.
Yes, sir.
Okay, so let me take you to BSE. BSEindia.com. So let us visit to Bombay Stock Exchange site. Okay. Fine. We need some data so that we can do our analysis. I need all of you to remember this data so we can do it. So first company that I had noted is about DLF. DLF is a very popular name in the realty sector. So you can find out here, you can get the code, all these things. We're looking for equity shares, right? So I'm typing here DLF. So basic data I want. So if you're typing DLF, I have to search the company, right? I got it, DLF Limited. Are you getting the data? Are you seeing the data? Are you able to see the page?
Yes, sir.
Yes, sir.
Okay, okay. This gives me some broad idea. Previous close, previous open, high, low. Okay, this is value weighted average price. All these data are there. This may not be relevant for us. 52 weeks high, 52 weeks low, upper price band, lower price band, 2-week average quantity traded. Okay, this TTQ is total turnover quantity, turnover, market capitalization. This is the relevant data for me because that will show the value of the entire share, so equity value. Then market capitalization FF. FF, can you tell me what is that? Anybody has idea? Free flow market capitalization. Some of the equity shares may not be freely available in the market. Maybe there is some lock-in period. Maybe promoters have purposefully kept that thing with the intention not to trade it with the market. So if you ignore those things, the remaining market capitalization can be called as the free flow market capitalization. Okay, free flow market capitalization is normally lower than the market capitalization, full market capitalization. But full market capitalization reflects the value of the equity. Okay, got it? Yes or no?
Yes, sir.
That means it says number of shares available for trading in the market into value of shares or price of share. So that is a full market capitalization. You can say that is the size of equity in the market. Right? Now you see EPS, that is earning per share. That data is available for this company. Now you can easily get this data, is it not? Earning per share. Then cash earning per share is also available. If you ignore this non-cash items which are there in the statement of profit and loss, you can find out cash earning per share. Then price earning ratio is also there. PB is price to book value ratio is also there. Return on equity, that data is also available. Okay, so we need all this data. In addition to that, if you go down, you can find out the revenue. You see, quarterly revenue data is available. Latest data will be available. And the last audited result, 2021 revenue, we can find out. Net profit, you can find out. EPS, current EPS, latest EPS data is available. Cash EPS data is available. Okay, operating profit margin, net profit margin, this data is available. Okay. Right. Yes and no? You can get this data?
Yes, sir.
Okay. Now you know for each company we have to collect data like this. Okay. Now what I'll be doing, I'll expect all of you should also do the same thing. What you can do, we can let me take a screenshot of this data so that I can keep it for my record. Let us say, just a minute, I need 2 pages. Let me take a screenshot. Then I'm going to my Excel file. I'll paste it here. You are unable to see the Excel file. Okay, I can also, I'll just show it for you. I can give some data source right now. I'll be showing you, just give me a moment. Are you able to see the Excel file? No.
No, sir.
No, you are unable to see the Excel file. I'll be showing you, just let me complete the pasting. I'll show you how you will be able to do it. Here I have pasted. You are able to see this BSC site, right? This is what you are saying. So I have copied this. I have taken a screenshot of this data. Okay, so that I can keep evidence that I have collected from this source. And again, I need this information also. This data also I need. So I'm taking one more screenshot. Then I'm going to my Excel file. Okay, in this Excel file, what I'm doing, I'm pasting these patterns so that it will be easier. Since the size is big, I'm reducing the size. I got the size reduced. I can crop the unnecessary part. Because I need this much of data only. Are you able to see what I'm doing? This data I need. This is one thing. Then again, this data is needed by me. I will also crop this picture. I need the DLF. I want the date when I have captured this data. Okay, so this is one thing I need. This is one more thing I have also available with me. Are you able to are you able to understand how I have captured the data from the site? Yes or no?
Yes, sir.
Okay. Now what happens? Now I am having evidence. I can show on 19th January 2021 from BSU website. I have collected this data. So I have not arbitrarily selected any data. I have taken only publicly available data. The screenshots are available. Fine, understood. For all these companies, we have to collect data like this. Now you tell me, once you have seen the data, you have to give me figures. Let us say I'm telling you, these are the list of, are you able to see now? These are the list of companies. Okay. Yes or no? Please keep on responding.
Yes, sir.
Okay. Now first I need all this data. You may add other data also. For example, first I need EPS of DLF. I have this data. EPS I can take from historically. I can take EPS is available. Trailing 12 months TTM data is available. Okay. Current EPS is also available. Last year's EPS is also available. Last quarterly EPS is also available. Prior to that, what is the quarter? So now I got a choice which EPS I can take. Okay, here the valuer has to apply the adjustment. So let us say I'm taking this TTM, the trailing 12 months EPS, but current EPS is also available, audited EPS is also available with you. Data is available. Okay. So tell me what is EPS, which EPS I should take? What is the amount? Are you able to read it? Or it is too small, not readable?
6.33.
Sorry?
6.33.
6.33. Yeah, please, I need your help. Then only you will be able to complete it. 6.33, you have put EPS. Now, cash EPS, that data is also available. Tell me what is cash EPS. All of you, please tell me. Cash EPS.
6.65.
6.65. I'm putting this data. 6.65. Okay, I need price earning and price to book value ratio. Tell me which figure I should take. Price earning, price to book value.
63.8.
63.85. First, you tell me. I'm going to this sheet. 63.85. 63.85.
3.5.
Then price to book value 3.5.
3.57.
3.57. We'll check it. Okay. Price to book value, you see 3.57, right? Then return on equity also can get from here. What is the return on equity?
5.59.
5.59. Return on equity, you take it 5.59. Okay. What is relevant for us? In fact, full market capitalization. What is the full market capitalization? Can you see it? And this is in crores. Okay, this is in crores, and these are the ratios, but this is the rupees in crores. How much is the full market capitalization? Can you tell me? Are you able to read it, or if you're finding fonts are bit too small? Are you able to read it?
Yes, sir.
Full
It's
market
1,992 crores.
So 1,992.72. So you take it 1,992.72. Mind you, this is in crores. Sorry, 1,992. No? Okay, again, sorry. Right? Correct figure. Okay, market capitalization free flow. We may not take it, or we will focus on the full market capitalization. If you want, you can take it. Okay, let us take it here. Market capitalization free flow. How much is that? 25,248.18. 25,248.18. This is also in crores. Then we can have some other data, like you see face value. You should know what is the face value of equity shares. You see face value of equity shares of these companies, how much? So rupees 2 only. You can take face value of rupees 2 only. Then other data is also available. Let us say you can capture some other data, turnover. We'll take this latest audited turnover, but of course you can take this quarterly turnover also. Right, quarterly turnover is there. If you want annual turnover, you can multiply it with 4. Okay, and if you take this thing, September quarter, June quarter, then if you add together, we are getting half yearly turnover. You can multiply it 2, and you can get the estimated annual turnover. So here valuer has to apply his judgment. Turnover, which judgment will be relevant. For the purpose of eliminating any bias, I am taking this audited turnover, financial year 2021. How much is that? Can you read it? Of course, font is little small. 3898.48, and this is again in crore. 3898.48. Are you able to read it? Is it visible?
Yes, sir. Yes, sir.
3898.48.
393.
393. Let me check. Yeah, 3893.48. So 3893.48. Okay. Now, other data also may be relevant, like operating profit margin or NPM, net profit margin. We'll take that thing. Let us make a very good model. So we are taking OPM percent, and let us say NPM percent.
So this you are building a relative valuation model.
Yes, that's why we are collecting the market data.
Okay.
Right. So you tell me what is OPM, what is NPM. We'll take last thing. OPM percentage, how much? 52.38 and 27.64. 52.38 and other one is how much? 27.64. Okay, now we got substantial amount of data. That's good. Are you able to see it now?
Yes, sir.
Okay. Fine. Now for like this, you need to get the data for all the companies. Then only you can compare it. You can see this is the market because this is the data for only one company. You have to collect data for other 9 companies. We'll be doing it very fast. Okay. How we'll be able to do it? You know the process now. You will be able to find out.
Yes, sir.
You know the source. Okay. Now repeatedly, I need not go to the BSU website because this data is already available with me. So what I can do for other companies, I am having this data. You can see it. Let us say for other companies. It's a DLF data is already there. Next is Godrej. Okay. Let us say Godrej. I have already taken the screenshot, and I have also this thing. You can see. Okay, I have pasted it here. I have cropped it. All these things are ready. So Godrej data very quickly I can take. Let me copy it for you. I can put the data here, or you can just refer them. Okay, Godrej data. This is the data for Godrej. Okay. Now tell me which are the data we need first of all. Should I show you? No. Okay, EPS, CEPS. Please tell me this data I'm showing you here. What is the EPS and what is the cash EPS? Can you tell me? EPS is? You have to help.
3.17.
3.17 and 3.78, right? 3.17 and 3.78, 3.17 and 3.78. Okay, then if P and PB, then friends, please tell me what is your price earning ratio and price to book value ratio. 601.03 and 5.95, right? Okay, are you able to see it?
Yes, sir.
601.03. You remember the data? Tell me 6.601.03 and other one?
6.
Yeah. And what is price to book value ratio?
5.95.
5.95. Then you need return on equity.
0.99.
Where is this return on equity? Return on equity. Okay, Godrej, 0.99. Right, return on equity, we're taking 0.99. 0.99. Market capitalization full.
52974.
How much?
52,974.70.
52.974. $52,974. This is in crores, right?
No, 52,974.
52,974.
0.70.
0.70. Okay. Yeah, it is in crores. Now, free flow market capitalization, also have a look.
22,249.38.
22,249.38, right? 22,249.38. Okay. Face value of the shares, let us check it. Face value is 5 rupees. 5 rupees. Okay. Face value, you can take it 5 rupees. turnover, you can get it from the other table. Turnover, you see how much is the turnover. We'll take annual turnover because the other company we have taken the annual turnover, right? Revenue is how much? 570.42. Okay, 570.42. And you need the profit margins. Profit margins, if you refer to how much is here, 58.58 and minus 7.5. Okay, 58.58 and minus 7.5. Okay, got it? Now, next thing is that you need to know this, collect the similar data for the next company, override. Please see it. Override data is also, I have already downloaded and cropped it and saved it properly. Now you can see. Can you remember the figures? EPS is 14.11. CEPS is 14.85. Okay, tell me the figures. 14.11. Then how much? 14.85.
85, yes.
85. Then P, PB, ROE, please remember. Okay, P 13.46, PB 3.82, then ROE 12.09. So 13.46.
That's wrong company.
Sorry.
That's the different company.
Oh, sorry. We are now referring to which company?
Overall.
Overall, you see. Yeah, please, friends, please check up these things. It's a 16.02, 4.97, and 67.02, then 4.97 and 7.4. Okay, can you remember? 67.02, 67.02, next to 4.97 and 7.4. 4.97 and 7.4.
Or two.
Okay. Then full market cap. Full market cap is how much? 34,000. This one, no, 34,378.59. 37,378.59. And free flow market cap is 11,001.15. 11,001.15. Face value of equities also we need to find out. This is 10 rupees. Okay, you can take it. This is 10 rupees. And what is the turnover? For turnover, we can come to this place. How much is the turnover? 249.18. We'll take the annual turnover. 249.18. 249.18. Then this profit margins we have to take. Profit margins, you see how much is the profit margin here. We are referring to this company over here. No? This is 64.32 and 49.03. 64.32, 64.32 and 49 point, how much? 03, I think. Right? So are you feeling comfortable that will you be able to collect data like this? I have showed you 3 companies. You see, it is very convenient. One can find out. Of course, one has to do that much of exercise, visit to the site, collect the data, and keep evidence also, because this data keeps on changing. Later on, if someone is challenging you a report, you should have evidence that on what basis you have computed, you have arrived at the business plan. Okay, are you comfortable up to this?
Yes.
Okay. Now, friends, you see, I had shown you 3 companies. I think no need to repeat it again. What I will do for other companies, I was already having some data. I'll just paste it here. 3 companies I have taken, right? For the other companies, I have taken for these 9 companies. Up to turnover data, I'm already having. The profit margins data I do not have. So I'll paste it here. Got the data? Is it okay? Okay, but when you are doing the project, I need all of you should have evidence like this. Just like you see, if data is available, for each data, there is a screenshot that gives me evidence that you have not blindly taken the data. Every data is verifiable. Each figure is verifiable. You have to be very careful about that. Okay, friends. Up to this, it is clear.
Yes, sir.
Okay. But this is, you see, this OPM, NPM data I'm not having for other companies. So please let us fill up. The next company is Phoenix. So Phoenix, if you see, Phoenix data is available. Just see what is the the OPM, NPM data is how much? 168.97 and 117.29. Okay. 168.97. 168.97. Then friends,
117.29.
117.29. Okay, please help me in remembering this data. Next is Prestige Estate. Prestige Estate, if you see, Prestige Estate, you see the data. This is 25.5 and 5.25. Okay, 25.5 and 5.25. 5.25. Next company is Nesco. So Nesco Limited, if you see, have this data, that's 85.99 and 59.26. 85.99 and
59.26.
59.26. Thank you. Next is this is Brigade. So Brigade data, if you see, Brigade data, you see 30.31 and 9.49. 30.31 and 9.49. 49. Next company is India Bulls. India Bulls, if you see, okay, 413.18 and minus 2341.15. Okay, just remember this, 413.80 and 2341.15. Okay, 413.18, I think. Then what is the other point? Minus
2341.49.
49. Okay. Now, Shoha Limited. This is also one more company who is in the reality sector. Shoha Limited, if you see their data, okay, you can find out. This is what 34.63 and 3.1. 34.63, 34.63 and 3.1. Wow.
So the second last one, India Bulls is 0.15, not 0.49.
0.19.
No, below that. India Bulls.
India Bull,
Yeah, it's 0.15, not 0.49.
0.15. Thank you. Okay, so we got the desired data now. Okay. Are you feeling comfortable? At least data is ready. Now you have to analyze the data.
Yes.
Okay. Now you see, it's good that we have data, and more importantly, we have evidence for all this data. Okay. Now, if this is there, will not right now, will not find out why it is so, why this there is no consistency in ratio. For understanding all these things, you have to report to their financial statement. Okay, if I can find out with some company where their operating margin is so high, we need to understand their profit and loss statement, how they have computed. Okay, so this kind of inconsistencies will be there. So for the timing, right now, in fact, we are not doing that financial statement analysis. We are arriving at the value. So we feel, let's say as a valuer, we feel that if I want to understand the realty sector, we are collecting these companies data for realty sector. If you see here, you can see also see this is also realty. This is also realty. Okay, you can check up the sector, the industry. Okay, you can check all these things that they are in realty sector. So now we'll be what we'll do to understand the market, so understand the realty sector. I'll be finding out the average of all this. Let us say what is the market average. Okay, are you ready? Now we can easily do.
Yeah.
Okay, ready? Now you see I'm putting the simple formula. Not a great thing. I'll find out average. Okay, average EPS I can find out here. Ready? I can find out this is the earning per share average of realty sector. And if you feel some particular company is not representing the market or is not comparable with your company that we are going to value, you can remove that. Okay, you can remove that. You can feel, okay, my company's equity shares are only 10 rupees. Why should I consider this 2 rupees share? Okay, ignore them, delete it. You can select some more companies where equity shares is 10 rupees. Or if you feel, no, I feel something is wrong in India Bulls, why it is giving so inconsistency result, remove it. Have some more company. Okay, but do not be biased.
Okay.
Okay, try to find out the basis on which basis you are selecting the company. And record that basis. On what basis we are rejecting India Bull, record that thing in your report. I'm rejecting India Bull, I've added this. Okay, so now you see, once you know this is the average EPS. Similarly, all the parameters can be averaged out. Just if you drag it, you can find out these are the average. Got it? This impact gives us an idea about the market. Once it is averaged out, you can understand in this sector what is the average EPS, what is the average cash earning per share, what is the average price earning ratio, what is price to book value ratio, what is the average return on equity. Okay, what is the market capitalization, what is the free flow market capitalization, what is the average face value has got no meaning. Then what is the average turnover, that is also got no meaning. So let us say average OPM. Okay, maybe average this thing NPM, one can find it. Okay. Now, friends, this data is ready with you. Are you feeling comfortable after this? You have collected the market data. So if this kind of analysis you have to do in your project, I think you'll be able to do it. All that you have to do, you have to visit to the website and you have to apply your mind in selecting company. Okay, you'll be able to do it.
Yeah.
Now, next step, once you are comfortable with this, now okay, market data is open. Now you have to see which business we are going to value. Let us say somebody has given you an assignment that you want to value a particular business. Okay, so you need to understand that business now. Okay, now what we will be doing? We will be finding out that company. How we will be able to we'll be evaluating that company. Means we need to understand that company's financial statement now, because through that thing only I'll be able to understand. So let us see another company's financial statement which we will be valuing. Okay, for your for this purpose, for the purpose of this particular session, I have taken an example. Let me show you the financial statement of that company, which I just audited. Okay. Yeah. You are seeing this company's financial statement. Okay. So this is a company. Let us say in this city, Bhubaneswar, SQL Promoters and Developers Private Limited. That is the name of the company. And this is the data about the audited financial statement. And this company is also in realty sector. You can see that profit and loss statement. You're seeing it. Just have a look. Are you able to see it?
Yes, sir. Yes, sir.
You can see their financial statement, their balance sheet is here. Okay, let us say some data is available. Their balance sheet is here. It is almost nearing finalization state. So I'll do one thing for the purpose of explaining these things. What I'll do, just give me a moment. Just 1 second. Just I'll make only one adjustment there. Then I'll get back to you. Just give me a moment, friends. Yeah, now I'll be sharing it with you. Yeah, are you able to see it? Yes and no? Are you able to see the Excel file?
Yes, sir.
Okay, so let us say this is the financial statement of the company. Okay, so this is the data available with us. This is the balance sheet position. This is the statement of profit and loss. And we are going to arrive at the value of this business, not by using this company's own fundamentals. We are following the market value method. Okay, and this thing, applying that relative model. Okay, now what we do? If you want to understand that company, then let me find out some other data about this company. Let us go here. Let us go to our model phase. This is the model. We have analyzed the market data. Okay, first we need certain inputs. Let us say here EPS has been calculated. Various companies EPS data is available. Let us find out what is the EPS of this SQL promoters. For this EPS, what we will do, EPS calculation, I need first of all, what is EPS, you know? Can anyone explain? Earning per
share, yeah.
Earning per share, but how to calculate that thing?
So we take all the earnings available to equity shareholders and divide by outstanding number of shares.
Okay, okay. So all the profits available divided by total number of equity shares. So what I will do, you have to remember these figures. I am showing you that balance sheet. Okay, so if you see at the statement of profit and loss, you see this is their revenue, these are their expenses. And finally, if you see, this is the profit and this is the tax and this is the profit available for equity shareholders. How much? 1153,571.
Yes.
Okay. Can you note down? Just note down somewhere 1153,571. Okay. Do it quickly. 1153,571. Right. And you want to know what is the number of shares? If you see here the notes to balance sheet, here you see notes relating to authorized capital. You see authorized capital. This is the issued capital. You can read it here. 1,000 equity shares of ₹100 each, fully paid out. That means how many equity shares are there?
1,000.
1,000. Now this data I need. So I'll go back to my model. Tell me what is mine. Now we have to, in that model, what we'll do, we'll write here inputs, profit after tax. How much is the profit after tax? Have you remember?
11,53,571.
1153
571.
571. Okay, let us say number of equity shares, just
1,000.
1,000. Fine. If that is so, then you can find out what is EPS. What is EPS? Let us say, let me do something right here.
1153.
Can you find it out here? So for sequel promoters, what I will do, equal to this divided by this. Yes or no?
Yeah.
You got it. So let us make it up to 2 digit to beyond decimal. So, okay. Now, how will we on this way? Well, that means on this parameter in this matrix, how we'll be able to find out the value. Now you see, we'll consider that this market capitalization, full market capitalization, will take it. This is the value. Actually, this represents the value of the equity. Okay. The real value of the business will be value of the equity plus value of the debt. Okay. Assuming that the company has no debt for the timing, let us assume. If you calculate the equity value is this full market capitalization. That means for this much of EPS, full market capitalization is this. And my market capitalization is 1153.57. What will be the value I have to calculate? So the formula for here is that equal to, are you with me? You see, for this much of EPS, this is the market capitalization. So for 1 rupee EPS, market capitalization will be this divided by this EPS. Okay. And multiplied with my EPS. I can get the value this much. So this is the value of equity by applying EPS method. This is the value of equity you can find out. And if the company has no debt, this is the value of the business. If debt is there, debt can be added to it.
So can you show the formula once? Full market
Formula
cap.
is, you see, full market capitalization divided by EPS into this particular company's EPS.
Oh, okay.
You can see the formula. Okay.
Huh.
Are you getting it? Now here, why it is, I call it as a model, or we calling it model, because once this data is ready with you, then if you put any company's reality sector, what is profit after tax and number of equity shares, then value automatically you will be getting. Yes or no? So this is one value I got. Now, there is one more way that you see different parameters we can use and value will be different. Different parameters will give us different types of value. Therefore, it is not easy to arrive at a one value, at a single value. We can get a range of value. Okay, some of these bases may be irrelevant. We may ignore that. But some of these bases might be relevant. We may consider that value as our true value. Okay, now let me do it on some other basis. EPS you have found out. Let us say I'm calling it the cash earning per share. What is the cash earning per share? Now, if you look at their financial statement, okay, if you see the profit and loss statement, you see this is the revenue, expenses, and in expenses there is depreciation, amortization expenses of how much? 95.004. Yes or no? So even if the earning is this much, the cash earning is what? More than that. Because after giving this, after allowing this non-cash expenditure, earning is this. So let us take this depreciation amortization figure. Can you remember? 95,004. Okay. Right, 95,004. I am taking you to my model. I am taking it. You see, I am writing here depreciation. I am putting this figure here. 95,004. Is it not? Yes or no?
Yes.
Now, if you calculate cash EPS will be how much? Is equal to profit after tax
Plus depreciation.
plus depreciation. Let me take it in a bracket. Divided by what? Number
Total
of
number.
equity shares. Wow. So this is my CEPS. If it is CEPS, on the basis of CEPS, if you want to compute my value, what I have to do? Equal to, again, this is the full market capitalization. This divided by market CEPS. Okay. Multiplied with my CEPS. You got one more value. Are you getting? So whether value is 24,99,000 or 28 lakh, this thing, it will be in that range. Are you with me?
Yes.
Okay. So what we need, like this, we need to know, okay, now it gives some idea in this model that first of all, we need some inputs. So we'll put some inputs here. This is the backend. Because this model is ready, market analysis is ready, formula is ready. Next time, you can immediately find it out. Immediately, if you just input figures, you can get what is the range of values. Very quickly, you can get several kinds of values. Are you comfortable? Let us go to third type of values. Right? Are you with me?
Yes.
Now let us go to PE. How PE will be computed? Price earning ratio. Can anyone tell me?
Share price by earnings per share.
Share price by earning per share. Okay, price earning ratio is the price divided by earning. Right. And what is the share price of this company? This is, we do not know. Do we know it? Because this is a unlisted company, readily available share prices are not there. Earnings of the company, we can find it out. Share prices are subjective. But however, fortunately, what had happened, this company had, prior to some time, had done a kind of equity valuation. On some basis, it has done a valuation. It has arrived at the fair price. On that basis, they had done a dealing. So we can refer to that share price, but that share price may not reflect the real price because that share price was based on certain projections. Because this is not a market value share price or on the basis of market approach that has not been arrived at. On some projections, company had given some projection, on that basis share value has been arrived. But for the understanding this model, let us take this model. Let me show you that valuation report now. Are you able to see?
Yes, sir.
This is a valuation report on December 31st, 2020. On that day, the company had done some kind of valuation of its equity shares. And we'll take it for the purpose of understanding this model, we'll take that valuation. But again, this is, you see, this is, you can see the valuation method. It is done on discounted cash flow method, on capital asset pricing model. So this value is purely on the basis of prediction. So it may not match with market value. It might give you some totally different figure. Now you see, value of the equity. Here it gives this a book value of equity. Can you remember? Can you note down somewhere? How much is the book value of equity? 1182. Okay, enterprise value, we did not use it. We'll be doing our own calculation. And what is the fair value of equity per share? 4,400. Will you please note down these two figures? 1182 is the book value and fair value is 4,400. Okay, friends. Are you getting it? Have you noted?
Yes, sir. Yes, sir.
Now just have a look at this valuation report. Why I'm saying this is not relevant. I will just give you some idea. You see, it will tell you how book value per share is calculated. Book value of share is calculated. It is a kind of cost approach. That means historical situation has been taken. What is the book value of assets? This must minus book value of liabilities of the company. So net book value of equity is this one. Number of equity shares is 1,000. So book value of equity comes how much? 1,000. Sorry, 8,112. It's a very simple by referring to the balance sheet. Balance sheet, you have taken the total value of assets and minus liabilities, you will getting the net book value. Understood how book value is calculated? Yes or no?
Yes, sir. Liquidity divided by number of shares.
Yeah, you'll be able to do it. But when coming to this thing, coming to how market value is calculated, you see cost of capital, all these things, return, company beta, all these things are calculated. And finally, it has been arrived at the value of company's share. Fair value is 4,400 rupees. Okay, this is on the basis of projections. Because how, if you see the detailed calculation here, and this is again with reference to the previous year's balance sheet. On the basis of 31st March 2020 balance sheet, this calculation was done. Here, if you see the company shows the projections. This will be the cash flow projection. On the basis of this cash flows projection, 4,400 rupees is the, you can take that is the market price of the shares. Here we can assume it. Okay, so 4,400 will take. Now, in this model, what we'll do? We need price per annum, price earning ratio, price and earning. What is the price? Price of equity shares, what we'll do? What we're taking it, we're taking it 4,400. Of course, we know it may give you some offset figure because it is based on projection only. Company real worth may not be like that. Price per share. Then what is earning per share? You have earning per share. If you refer to the company's data, now you see company's financial statement. Again, I'm showing you. You see, this is the basic earning per share. Are you getting it? How much? This is in the company's financial statement. If you are evaluating the company, you can download its financial statement from the website. From their website, you can find it. What is basic earning per share? Can you read it? Is it visible?
Yes.
How much?
1,154.
Okay, 1154. So we'll do that. Now, can you calculate now what is the price earning ratio. What is the
Yes.
price earning ratio?
4,400 divided by 1,151.
Okay, this is, you see, totally different from the industry. Industry is going around 100.647, but here it is different. Anyway, for understanding this model, we'll take it. And what will be the, under this thing, again, we'll be calculating what is the value of equity. Or you can arrive at what is the market capitalization. How it will be calculated? For you see, for this much, we can say this is the market capitalization divided by this into 3.83. So 1104, but is of course a odd number. Value may not be like that, but it shows like. Okay, got it? Understood the model?
Yes.
Next, we can say price to book value. Share is available, so we need to know what is the book value. Book value means book value of assets and book value of liabilities. And both the data was available in the in that valuation report. This data was available. Okay, should I show you that? Let me once again show you. Just remember that figures, or let me. We'll do one thing. Let us refer to the company's balance sheet. Book value of assets and book value of liabilities. What is the book value of assets? Sorry, let me show you the balance sheet page. How much? You can take the total figure. How much? Can you note down? 736,23,393. Okay. That is the book value of assets. If you take book value of liabilities, that means you have to exclude this equity portion. Forget about this equity portion. If you take up to this book value of assets, did you note down? Yes or no? Whether somebody has noted down the book value of assets. It is 736,23,973. Okay. 736,23,393. And if you take book value of liabilities, you select all these sales, the total figure coming here, you can show it here in the bottom portion. This is 643,57,671. It is appearing here at the bottom sum. So now what we'll do, I'll put these figures in my model. Book value of assets are, have you remembered?
73623. So 23, sorry, 393.
393. And what is the book value of liability? 643,57,671. Okay. Now we'll calculating price to book value, PB ratio. What is the price? Price is here, share price you are taking here, divided by what is the book value? Book value is this minus this. Okay, you are getting this figure. Okay, now you have to calculate again value of equity on the basis of book value. This is one figure we had calculated, but of course this projection might be wrong. The value of equity figures might be wrong because it's not a listed company. Therefore, it is giving some absurd figure. Only I'm explaining you the concept. So what we'll do, this is the market capitalization. divided by this multiplied with my market capitalization, it will give you some negligible value. This is the value. Okay. Are you getting it? Will you be able to compute like this the value? These are the inputs. You can keep it, can color this cell so that all that one person has to do, if someone is developing a model like this, he has to do only, he has to fill up this particular portion. Is it not? He has to only fill up this thing, then it is automated. You can get the value. So you can get value like this on the basis of return on equity, on the basis of turnover. So most of the cases we use the value on the basis of turnover. So here that is relevant. You can reject all these things. Let us compare the turnover. Okay. Now you see what is the turnover of this entity. Should I do this valuation on the basis of turnover? So let us see the company's last financial statement. Tell me what is the turnover. Sorry. $195,89515, right? 195,89515. So on that basis, if you do the valuation, here you see the valuation. I have to write the turnover. Turnover, this is to be in crores. So crores, it comes to only 1.95. 1.95 crore. So what will be the value of equity if you follow this particular method? What we will do? Equal to what? This divided by, this is the market capitalization for this much of turnover, divided by this, multiplied with this, you will getting, this is the figure. Okay. Are you getting?
Yes.
So like this, will you be able to calculate the value of equity on the basis of only operating profit margin, net profit margin, then return on equity. Okay. On this basis, you'll be able to. So this is the homework for you. So you can calculate value of equity on the basis of return of equity, on equity, on the basis of OPM and equity. Hope you have understood how, what in detail, that what are the things involved in the process. This is basically a simple process, but since you are developing the model, so you have to put the formula and you'll be able to do it. Is it clear up to you? Are you feeling confident that you'll be able to develop a model like this? Future models will be a little complex. Well, we'll be calculating intrinsic value by using our, let us say, income models. But this model, will you be able to apply?
Yes.
Okay. Any query you have? Do you have any query?
So the 5 companies which we have selected, then we have to take another company to evaluate or what?
This 5 company for which valuation is already available. Now
Yeah.
you want to evaluate different company. Okay. It may be some other company. You may take other data from some other company. Any other company you want to value. You have to compare that company with the market. The 5 companies you are studying to know the market data. After that, one more company is to be valued. That company's business is to be valued. Okay, understood?
Okay, sir. So can we get the Excel template blank sheet like how you made?
Okay, you can get, but purposefully, I don't want to give it. Okay, because in that way, what will happen, you will not be developing that thing. That is not my intention. So I'll request all of you to develop your own template. You'll be able to do it.